The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box Europe this Monday morning, bank holiday in the UK, I hasten to add. I'm Steve Sedgwick with Karen Cho and Juliana Tattlebaum, and these are your headlines. The president, Mr. Trump, defends his tariff policy and dismisses concerns about his handling of the US economy on NBC's Meet The Press, later adding that his main priority now is securing a fair trade deal with China.
Warren Buffett shocks Berkshire investors, announcing he'll step down as chief executive after almost 60 years at the helm, handing over the reins to Vice Chair Greg Abel.
And crude prices plunge after OPEC Plus agrees to accelerate production hikes again, while the oil sector faces the prospect of a mega takeover, with Shell reportedly eyeing rival BP.
Wow, the news gods have been kind. Well, hang on. What are all three of us doing in on a bank holiday? Does no one want to be with their families? What's going on?
I mean, the weather turned. We had the best
The
of it
weather
on
turned. I've had
Saturday,
enough
so
of them. I've seen them recently, yeah. Hey, look, that's not what I want to talk about. Good morning to you both. What is the best Trumpism of the last couple of days? We're going to spend a lot of the show talking about it as well. Was it on Greenland again? You know, he's after that one, isn't he? China, of course, that's kind of more the normal pattern. Canada, 51st state, he was back up there again. They weren't anywhere near my favourites. Did you see the one about Alcatraz?
Oh,
did you see the one?
I didn't
have you been to Alcatraz?
Yes, I have been.
Have you been to Alcatraz?
No, I haven't. I'm an East Coast gal.
Well, you can't go over to the West Coast. So it's that lovely little boat ride you take in San Francisco, and then you go in there, and then you stand in Al Capone's cell. I mean, my goodness me, it's grim, it's terrible. But now he's talking about turning it back into a federal facility. Nancy Pelosi's going, what are you talking about? It's a tourist attraction. But my most favourite was the movie industry. Seen that one?
Yes.
100% tariffs on films brought in. I mean, a little bit late to the party on this one.
I thought you were going to go with the Pope wanting to be the next pontiff. I thought that was the one you were going to go for.
Picture? What was
which
that about?
obviously has big connotations for a big Christian population. But I
think that upset a lot of Catholics.
Well, of course.
So basically, we should fill in the gaps. On Truth Social, there was an AI picture of Mr. Trump dressed as the pontiff, exactly. as a pontiff.
And don't forget, we're heading towards the conclave as we talk about who's going to be the next pontiff. So, big one. But to the silver screen, what jumped out to me this morning was that as we talk about Trump saving the silver screen, having more production back in the United States, is this just a message that every single sector that may need saving may need a tariff now? Because in the past, it wasn't about using tariffs to save industries, but is this now the go-to? And you would think for services, that would be a very different equation, but clearly this is the go-to policy.
To my mind, the most important Trumpism that I heard over the weekend was in his interview with our colleague over at NBC. And we'll get to the sound. Hopefully we've got the sound for them. But to me, it was the emphasis he put on lower oil prices for the U.S. economy. Because we've been talking so much about tariffs and the negative impact of tariffs in terms of higher costs. But he said lower oil is actually a much bigger tailwind than the headwind that you're going to see from tariffs.
Yeah.
And I think that was really important.
I wonder what Darren Woods thinks about this at the current price as well. I wonder what every single player, and I know a lot of them, we've interviewed a lot of them, I've spoken to a lot of them, I wonder what they all think about what is WTI. Can we put WTI up very briefly? What is WTI now? 55, 56 bucks? I mean, we've got Brent trading around about $59 a barrel. Where is it? I'll give you exact level, 59.51 on Brent. I've got to be honest, sir, I don't think your oil industry shares. There you go, 56.45. Thank you, Adam. He's not working. He's a bank holiday worker as well. I don't think your industry, sir, feels very comfortable at 56 bucks about drill, baby, drill.
But the other thing here is that he's trying to say drill, baby, drill is the reason that oil has come down. But I would argue that oil has come down because of growth concerns and because of what OPEC Plus is doing. It's not because of Trump policies to bring the price of oil and the price of gas down.
Best oil industry, and I shouldn't say that because I know them all. One of the best oil industry, and it's coming up 8:30 London time. That's Amrita Sen. So all of these stories we'll try and cover. But my goodness me, the man keeps us busy. Nothing wrong with his energy levels, that's for sure. I'm talking about the US President Donald Trump, who has brushed off concerns surrounding rising prices from his tariff policies, describing recent economic pain as part of a transition period, and saying the US would be okay in the event of a short-term recession. In an interview with NBC's Meet the Press, the president also reiterated calls for the Federal Reserve to lower rates, calling Jerome Powell a total stiff. But saying he would not remove him. Kristen Welker filed this report with more from her wide-ranging interview with the president.
More than 3 months into office, President Trump isn't willing to fully commit to taking ownership over the economy. When does it become the Trump economy?
It partially is right now, and I really mean this. I think the good parts are the Trump economy, and the bad parts are the Biden economy, because he's done a terrible job. He did a terrible job on everything.
So let's talk about the tariffs. And I want to ask you about something you said this week. Got a lot of attention. You were at your cabinet meeting. You said, quote, I'm going to quote what you said, maybe the children will have $2 instead of $30.
Yeah.
And maybe the $2 will cost a couple of bucks more than they would normally. Are you saying that your tariffs will cause some prices to go up?
No, I think the tariffs are going to be great for us because it's going to make us rich.
But you said some dolls are going to cost more. Isn't that an acknowledgement that some prices will go up?
I don't think a beautiful baby girl that's 11 years old needs to have 30 dolls. I think they can have 3 dolls or 4 dolls because what we were doing with China was just unbelievable. We had a trade deficit of hundreds of billions of dollars with China.
When you say they could have $3 instead of $30, are you saying Americans could see empty store shelves?
No, I'm not saying that. I'm just saying they don't need to have $30. They can have 3. They don't need to have 250 pencils. They can have 5.
Is it okay in the short term to have a recession?
Look, everything's okay. What we are, I said, this is a transition period. I think we're going to do fantastically.
The president's first 100 days also marked by his immigration crackdown and mass deportation efforts. Your Secretary of State says everyone who's here, citizens and non-citizens, deserve due process. Do you agree, Mr. President?
I don't know. I'm not a lawyer. I don't know.
Well, the Fifth Amendment says
I don't know.
It
seems it might say that, but if you're talking about that, then we'd have to have 1 million or 2 million or 3 million trials. We have thousands of people that are some murderers and some drug dealers and some of the worst people on earth. Some of the worst, most dangerous people on earth. And I was elected to get them the hell out of here, and the courts are holding me from doing it.
But even given those numbers that you're talking about, don't you need to uphold the Constitution of the United States as president?
I don't know. I have to respond by saying again, I have brilliant lawyers that work for me, and they are going to obviously follow what the Supreme Court said. What you said is not what I heard the Supreme Court said. They have a different interpretation.
Welker also asked the president whether he could see peace between Russia and Ukraine after more than 3 years of war.
I do believe we're closer with one party and maybe not as close with the other, but we'll have to see. I'd like to not say which one we're closer to, but we did do a deal for the American people that was good. We were able to get rare earth. You know, the Europeans are getting paid back. They have a loan. We didn't. Biden just gave them $350 billion. He has no idea where the money is, what happened. And at least we'll, in one form or another, get our, I don't feel so foolish. And remember this is Biden's war. This was a war that was never going to happen if I were president. This is a horrible, horrible war. And I get to see shots of soldiers through, satellite that are just so terrible. 5,000 soldiers are being, 5,000 soldiers a week on average are dying. They're not American soldiers, but I want to solve the problem. They're Russian soldiers and they're Ukrainian soldiers. And if I can save 5,000 souls, I just love doing it.
How long do you give both countries before you're going to walk away?
Well, there'll be a time when I will say, okay, keep going, keep being stupid.
When does that
fighting.
come? Are you close to it?
Sometimes I get close to it and then positive things happen, okay?
What's the red line for you? At what point do you say, that's it, we're walking away?
Well, you'll know. I mean, there'll be a time when I may say that. And if I do,
not there.
There may be something I can't, maybe it's not possible to do. There's tremendous hatred, just so you understand. Kristen, we're talking tremendous hatred between these two men and between, some of the soldiers, frankly, between the generals. They've been fighting hard for 3 years. I think we have a very good chance of doing it.
Very quickly, if you do walk away, would that mean that you would pull military and intelligence?
I don't want to say that now. It's too early to say that. I don't want to get into that.
Trump said his main priority with China is to secure a fair trade deal. Speaking to reporters on board Air Force One on Sunday, he said that while he has no plans to speak to Chinese President Xi Jinping this week, US officials are in talks with their Chinese counterparts. Meanwhile, Trump announced a 100% tariff on movies made outside of the United States. And we were talking about that earlier. So tackling the silver screen now, Juliana. But of course, we're getting set up for more market action this week.
Let's take a look at where we've traveled as we get into the market action that we're anticipating here in Europe. Last week, we saw Wall Street wrap up 9 straight days of gains. That was the longest winning streak recorded since 2004. So investors have really been piling back into the market despite all of the uncertainty around trade, around tariffs. It really has been a stunning comeback for U.S. markets. You can see this is where all 3 of the majors landed on Friday. The Dow Jones adding back about 1.4%, the S&P 500 gaining up 1.5%, and the tech-heavy NASDAQ 1.5% higher as well. A lot of the optimism fueled by strong tech earnings last week, Meta and Microsoft namely kicking things off and suggesting to the market that the AI trade is well and truly intact. In terms of the Asian trade overnight, here's a look at what's happening in the overnight session. You've got the Australian market trading about 1% lower right now. The Nifty 50 over in India trading about 0.4% higher. We've got the Australian market digesting the Labour Party election win. We're going to get into that later in the program. In terms of European market action, we are closed here in the UK today for the May bank holiday, but elsewhere markets are open. And you can see here we're looking at a very modest pullback at this early hour. The FTSE MIB over in Italy, the CAC 40 in France, and the Xetra DAX in Germany all pointing to a slightly weaker trade today.
Juliana, let's take a look at those US futures as we get set up for the trading week. And you can see looking somewhat cautious at this hour. Across the board, we're expecting to see a dip from the S&P to the Dow and the NASDAQ. On the data front, the US economy added 177,000 jobs in April, higher than the 130,000 economists had been forecasting, but lower than in March. Meanwhile, the unemployment rate came in at 4.2%, unchanged on the month. Let's get to Cole Smead, the CEO of Smead Capital Management. Cole, a lot of news over the weekend, and I'm not talking about Trump this time, but Warren Buffett now proposing to hand the reins over to Greg Abel by later this year. And this is effectively a huge change for markets. A man who was captain of his own business, but also in some ways captain of the markets, often setting course in one direction away from other market participants. You were at the meeting over the weekend, the shareholder meeting. What did you think were the big takeaways?
Yeah, and it's a wonderful question, and it was a real honor to be there at the meeting. Obviously, I hadn't been to the meeting in over 10 years, and I listened to it obviously last year and watched it after the fact as well, and just noticed the frailty to Buffett's voice and his ability to meet the needs of the questions last year. So I went, thinking it was his last, and obviously it ended up being his last. The couple of the questions that really stood out to me in the meeting, he pointed out that what we just saw in April really wasn't that big of a deal, which is interesting to me because if you look at most people in the last 60 days, they thought it was a massive deal and a crazy spin out to a bear market in effect. He just said that's not a big deal, and if 15% makes you think a lot, you need to change your investment philosophy. I think he's really trying to guard people from doing stupid things, and I think he's really explaining there's too many people taking risk in stocks that don't know what they're doing. But the other thing that he opened the question of, and you just talked about tech earnings, looking really strong. He pointed out that the best businesses are the ones that create their own capital and they don't need any capital. Well, the reality is the CapEx boom going on in AI, Buffett thinks that's an open question. When asked, when asked about that, he put it out as like, we'll see what happens there, as though it's not foreknown in his mind. And the same person that put up a 5.5 million% return is questioning whether that AI spend is going to be meaningful. not dissimilar to other CapEx spends like the oil business in America in the 2010s or the railroads in the 19th century could have been.
Cole, which really stokes some of the concerns a lot of market participants have about this huge AI spend by big companies that were really at the forefront of the gains that we saw in 2024. As you step back and you listen to the advice from the Oracle of Omaha, what does that mean in terms of the market gains we've had? The past week we recaptured about 3.5% on the NASDAQ. Is this a market that will be grinding higher at some point, or do you think there are danger signals after what Warren Buffett was talking about?
Yeah, it's again another good question. Markets bottom on bad news, and you'll notice we supposedly bottomed this market on good news. Obviously, better than expected information on tariffs, and that's not how you bottom markets historically speaking. You bottom on really bad news where there's in effect you run out of sellers. And so to your point, Karen, we did not run out the sellers out of this market. I think if you look at the statistics, there was $40 billion of retail buying in the United States just in the month of April. And then if you look at the gambling going on in the stock market, and he pointed out in the meeting, Buffett did, that this is a casino that we deal with, 60% of the stock options being bought right now are zero-day options. So there's just a lot of degenerates out there gambling, and it just looks like a very poor setup for the market. That being said, if you go look at certain parts of the market, you can go out and look at the home builders that are priced as though we're in a deep recession. They're down 40% from their highs. The retail, look at the banks. The banks are not priced back at their highs. And so there's just a lot of stuff going on right now.
Cole, when you talk about a lot of stuff going on right now, does it make sense to you that we would see investors buying this market when Goldman puts the risk of recession at 45% in the next 12 months, Apollo Global Management putting it at 90%, the S&P 500 off just 3% since the start of the year, and we're on a 9-day win streak? Does it make sense?
Yeah, I don't think it makes sense. I think people want to treat this as like Pavlov's dog. The bell rings, they salivate. Stock market opens, the bell rings, and they get their returns. And the only issue with that is ultimately that's not how you make money long term. You got to go through bad markets, you got to go through good markets. And I think everyone's trained to just sit in good markets. And I think that's what Buffett's pointing out. If a 15% decline bothers you, you have the wrong investment discipline. And I think a lot of people think we're just going to cascade to new highs. The best of the equity era is over. The question is, where are we going? And again, the interesting part economic growth could pick up, but that might not help with the stock market. That's the weird part to this. With really good earnings in those companies, you're not finding that they're producing higher stock prices. How do the best earnings of those companies have ever produce lower stock prices? That doesn't make sense, but it also means we probably ran out of buyers at some point in the last 6 months.
Hey, Cole, the best conversations I've had on the US consumer over the years have probably been with you, actually, and we've had some great conversations on that. So we've talked about the markets, we've talked about the economics as well. Is the consumer, given the fact that we're virtually at full employment from the payroll on Friday, is the consumer beginning to have problems and worry about where they're paying from? We've seen BNPL occurring on groceries, for goodness sake. Or actually, do you think the consumer is going to weather the storm? Because I think, for me, they are the key to certainly the domestic US story.
Yeah, I don't disagree. In fact, I think they're really the linchpin of whether there is a recession or not. And I say that because, to your point, if you look at the household debt service ratio, we're still at historically low levels in that. So what does that mean? That means people can marginally borrow for a mortgage or a car, or if they need to take on extra credit card debt. We have still a lot of room for that. Now, I'd say that debt service number, the unemployment numbers, and then really housing. Even though the housing stocks are down 40%, you're not seeing tumult in housing. And that's another thing that would really cause a lot of consternation, to your point, Steve, to that consumer. So I think there's elements of this that are like a replay of 22, right? You have high short-term rates on the curve, and what that's doing with the tariffs discussion is causing a lot of consternation in business. Rate-sensitive businesses like the home builders have come down. IPOs have shut. All those things happened in 22. The big difference is Putin was rolling tanks across the Ukrainian border back then, so oil was ripping. Oil's now having its kind of comeuppance in the near term. So I look at it like 22. The difference is the economy didn't have big problems in 22. And really the economists are still trying to figure out why. But it's ultimately because when we're still spending 7% of our GDP in deficit in this country, it's tough to have a recession. It doesn't mean you can't have business slowdowns. We did have business slowdowns. Tight money causes businesses to slow or funding to slow. And I think that's what a lot of investors have missed. If that continues on, that's what likely squeezes capital in the stock market is if you're not going to raise IPO money, it's really tough to get people excited about the stock market for a while.
Cole, always a pleasure to have you on the program. Cole Smead, CEO of Smead Capital Management. Coming up on Squawk Box Europe, Warren Buffett kicks off a succession plan at Berkshire Hathaway, announcing he will step down as CEO at the end of the year. We'll have more from the AGM next. Plus, OPEC Plus agrees to hike output in June. We'll discuss later this hour. And European leaders are set to launch the Choose Europe for Science initiative today, aimed at attracting foreign talent. We'll speak to the CEO of generative AI photo editing app PhotoRoom. Tune into that interview at 8:15 BST. Big story over the weekend. Warren Buffett is handing over the reins of Berkshire Hathaway, announcing Saturday that he is stepping down as CEO at the end of the year. Vice Chairman Greg Abel will take the top job. Investors expect the group to retain its long-term focus, but there's no denying it's losing some star power. The 94-year-old announced the news at the end of a 5-hour Q&A, having not even told Abel of his plans, making it clear he trusted in the new chief.
We'll go forward with that operation, and I will play with a Ouija board or whatever, and that comes out in terms of doing things. But I will not. I have no intention, zero, of selling one share of Berkshire Hathaway. It'll get given away gradually.
The Oracle of Omaha made more than $100 billion before dividends on bets on Amex, Coca-Cola and Bank of America. He was late to the Apple game, buying in 2016 and making around $140 billion still. BYD was another success based on the advice of his late business partner, Charlie Munger. He invested $232 million in the Chinese EV maker in 2008 and saw that swell to more than $9 billion before he started selling. Over the past year, Buffett has sold heavily, and for the first time in decades, Berkshire holds more cash than listed equities, reporting $348 billion in cash and short-term U.S. government debt at the end of March. That's more than double the amount a year prior. That decision to sit on cash rather than stay invested in the market appears to be reaping benefits. Berkshire's stock is up almost a fifth this year, far outperforming the S&P, which is in the red. The question for Abel is now what to do with all that cash. Well, let's get out to Lynn for more. Lynn, the passing of the baton here, a big one for investors. Just talk us through the latest.
Yeah, hey Karen. So we heard as well that Mr. Buffett, as well as the designated successor here, Greg Abel, was asked about their investments in terms of the Japanese trading firm, so those 5 Soga Sosha that we first found out they were invested in back in 2019. And again, we really heard this optimism coming through from both of them. They said that these are long-term holds. They see their investments there to remain for 50 years, potentially forever. Mr. Buffett also said, look, we've got $20 billion invested in these 5 trading firms, but we wish we had $100 billion. Keeping in mind just recently as well, in the last couple of months, we saw an upping of their respective stakes in these trading firms. And also he had written to shareholders saying that he's been able to negotiate as well some flexibility in that 10% ceiling with these companies. So we could see their stakes in these companies going up a little higher, given that they are just below that 10% level at this stage. But, you know, this really underscores that value strategy, buying, as he says, into great companies at fair prices. Although Mr. Buffett said when it came to these trading firms at the entry point, point, they were quote unquote at ridiculously low prices. And that was really one of the main things here, that even though these trading companies' share price have sort of risen by more than 200% in the last 5 years, also outperforming the Japanese Topex index as well, that versus metrics by, averages S&P 500, whether that's, the price to book or the price to earnings, we're still talking about very cheap valuations here. So that's part of the story. They've also been buying their investments in these companies through yen-denominated bonds, so leveraging the very cheap borrowing costs in Japan as well. And also he's spoken about the fact that he really likes the corporate governance story there, and that these companies have really heeded the calls by government in terms of returning value to shareholders, whether that's in terms of generous dividends or buybacks as well. I think, some analysts describe these Soga Sosha as Japanese-run companies with global exposure, because they're in everything. They're very, very diversified, and perhaps that's in the short term going to cause a bit of pain given the tariff uncertainty. And we did get the earnings last week, with a lot of these companies also putting in these earnings buffers for the first time to account for the tariff uncertainty as well. But as we heard from Mr. Buffett, this is a long-term play, and he really believes in these companies.